Well, coming off of a discussion all about luxury and then finding out that more people want to buy homes than not certainly means that, hey, you know, people get to finally do some of the things they want. Maybe it's a good time to do a lot of the things you want, which may include buying a home, quitting renting, or buying a bigger or nicer home in a different neighborhood. But, you know, what happens when something bad happens down the road? And maybe that home you thought you were going to love isn't really a reality anymore. David Clemons joins us, who works to protect consumers from the potentially significant financial and psychological cost of needing long-term care. Welcome, David. How are you?
Pretty good. Thanks for having me, Ben.
Well, it's good to have you, and you've been on this station before, which is good, so no nerves.
No, I'm all ready.
All right. Talk a little bit about this. I mean, people want to have a nice life, I think. I think people who listen to my show, they better. Otherwise, they probably don't like listening to me as I continually badger them to try to make choices. But what do you think kind of this, well, there's this definition of like what long-term care is. I mean, right? You want to live a better life or you want to maintain some sort of life? I'll let you explain it.
Well, long-term care, this is not a fun subject to talk about, but I think it should get everybody's attention. Because long-term care has a probability or a likelihood that 70% of us will die needing long-term care. So it should get us our attention because a lot of us are going to need this kind of a help. The definition of long-term care is having a health issue or a change in health where for 90 days or longer, somebody's going to have to be helping you with your life, whether they're bathing you and feeding you and dressing you, doing whatever you can't do for yourself. That's what long-term care is.
Well, and you said it earlier differently. You said it's the process of dying slow.
Right.
Which 70% of people do.
Only 30% of us get lucky enough to die fast enough, and this is not a problem then.
Right, for 30%. And it doesn't everybody say, I want to die fast. But I think you alluded to a great point earlier. I mean, the chances that you need long-term care really are about 70%.
Correct.
And this is different than it was before because of medicine.
Correct. We used to die from pneumonia. You break your hip and die of pneumonia. Now, grandma doesn't die in the hospital from pneumonia. She gets rehabbed, goes home with a broken hip, and can't walk for 6 months. So who takes care of her? There's only 4 ways that you deal with that. Your children help you. Your child comes back into your home. You move in with your child. Your spouse takes care of you. Or you have to write a really big check to a nursing home or a home care agency that's going to come to your house and take care of you.
And is that something most people realize? I mean, there are 4 options of dealing with a potentially catastrophic injury or sickness. Children, your spouse, you pay for it, or long-term care.
Or the 4th one, which you didn't mention, was Medicaid, and that's after you spend all your money. Then there's welfare, and then now the state takes care of you in a place that they decide where you're going to live.
Which is like Shady Acres.
Exactly. It's called welfare.
Yeah. Talk a little bit about, I mean, how do people deal with knowing there's these 4 options? Do people know there are these 4 options, or do they just think it'll all be okay?
Well, for thousands of years, the families just took care of each other, and everybody lived on the same block. You lived on the same farm, and so lifestyles were different then. Now our children don't even live in our same cities. Our children have jobs. The wife and the husband have a job, and they're taking the kids to soccer practice. So lifestyles have changed so much that the children of the parents that have the problem don't have the time to help with them. And then the cost of the problem has gotten so catastrophic because there aren't enough facilities, there are not enough caregivers. So the cost is somewhere around $100,000 a year just for a modest problem. I'll just use $30 an hour as a number. If you had 10 hours of home care at $30 an hour, that's $300 a day. That's a $9,000 monthly expense. That's almost $100,000 a year.
That's true because you need it Saturday and Sunday too.
Yeah, and maybe your daughter comes over on Saturday and Sunday, but on Monday through Friday, somebody's taking care of you at $300 a day. That's expensive.
So what do people do? I mean, you talk about long-term care is really this insurance. What does it provide?
Well, what insurance provides is a dollar amount, and the person picks that dollar amount, and that dollar amount is used to be spent on the caregiving, whether it's in a nursing home, assisted living, or in home care. So you decide how to spend that money, and it's thousands of dollars a month, $4,000, $5,000, $6,000 a month. So if your problem cost you $9,000 and your insurance coverage covers $6,000 of that, you're still going to write a check. Or your daughter's going to take care of you for the $3,000 that you didn't have to spend to have a $9,000 problem.
So it's really, you're buying a dollar amount, not necessarily an amount of care?
Yeah, and that the most economical way you spend that dollar amount is the more care you'll get, or you'll live in a nicer facility with a view of the lake or on the river, or wherever you happen to be, because there's nice places to assisted living in nursing homes and there's not so nice ones.
So when you talk about what it covers, I mean, anything you can pay for is kind of what it sounds. I mean, there's some ebb and flow. I mean, you may be a nicer place, worse care. I mean, there's probably a lot of variance.
Well, facilities are just like hotels. You got the Westin and you got the Marriott and you got the Motel 6. So the facilities are all based on how nice and how fancy they are. Home care, again, what it covers from a home care standpoint is everything that you can't do for yourself. You can pay to have somebody do your dishes and your laundry and prepare your meals and bathe you and dress you and go to the doctor's appointments, take your pills at 10 and 2, or whatever has to be help done gets paid to get done for you now.
Does there have to be an event? I mean, does something have to happen, or can you just be like, guys, I don't want to do this anymore. Long-term care, sign me up.
Well, there's specific triggers on what causes a long-term care insurance policy to help you. 50% of the claims come from cognitive issues like dementia and Alzheimer's and Parkinson's, where somebody's mind just doesn't work for them anymore. Another bunch of them are from falls and fractures and also from strokes. But something has to happen, whether it's unexpected or a long drawn-out illness, and the expectation of the problem has to have a need of 90 days or longer for the insurance company to begin helping you.
And then, so why do people not buy this? I mean, what percentage of people have long-term care insurance?
Well, it's less than 20% of our population in the adult brackets from 45 to 80. Only about 20% of our population has this insurance, our long-term care insurance. And the other 80% don't have it because they just can't buy it. Many people, in fact, this has become a very hard insurance to purchase because you have to be very healthy just to qualify from the insurance company to let you buy it. A lot of people also can't afford another bill in their life. So $100 or $200 a month premium for a couple, they just don't have that money. So they're not going to be able to purchase the insurance. And then there's some people that just won't insure anything. There's a Supreme Court ruling right now going on in Washington, D.C., where they're trying to decide if it's legal for the government to require us to buy health insurance. Well, people have to pay a fine if they don't. So do we really have to buy long-term care insurance? No.
Do you think, we're here with David Clemons, long-term care and life insurance specialist. David, talk a little bit about, is there a good time? Is it better to buy early than late? I mean, do you just end up putting more money down? I say down the drain very, very affectionately for insurance, but do you end up putting more money towards it than you would, as you get older?
Well, that's a great question because there's not really a sweet spot when you should buy. Mid-50s is when most people that I sell policies to are buying around that mid-50s range. But I'll come back to that insurability decision again. Is at 45 years old, if you've got MS or Parkinson's already, or you've had a stroke or bad, insulin-dependent diabetes, you won't be able to buy this insurance at any age. Do most people start buying this insurance in their 40s? No. Do they start looking at it when they're in their mid-50s because the kids are grown up and there's not the other expenses that they have in their lives? Probably. But you can only buy this insurance when you're healthy enough to qualify for it. And the younger you are, the less expensive it's going to cost you for your whole lifespan. So the sooner the better, really.
And you end up, I guess, actually, you're insuring a much longer point in time the younger you are, because if something were to happen, now you're covered for, longer.
Well, here's a statistic for you. 40% of all long-term care insurance claims are people under 64 years old. So this is not just an old person's problem. And 30% of those claims will resolve, meaning the people will get better. So you break a hip, you get in a car accident, you have a stroke, and a year later you're better because the stroke sometimes takes you a long time to rehab from.
Well, David, we have to go to break, but we'll stick around. We're going to have you back. We're going to talk about more misconceptions, not only in insurance and long-term care, but also in the real estate.